It's great to have you join us. Yes, that's the focus on the show today. This last meeting for 2025. But before we get to it, let's get you some numbers now and what's playing out with some major news right here in Nigeria. See big news from Nigeria's energy sector today. Dangote Industries struck a major deal with Honeywell to double the capacity of its refinery for 1.4 million barrels per day by 2028. The move comes as part of Dangote's strategy to scale up its operations, process a wider range of crude, and boost production of polypropylene. And industry watchers say this could, reshape Nigeria's refining landscape and even its export potential there. So we're keeping eyes on that. But let's get a check on the on oil markets now. See, oil prices eased as oversupply concerns that outweighed worries that Russian shipments will remain under sanction as talks to end the war in Ukraine. That remains inconclusive. We see Brent crude was lower this morning, but we're still seeing a drop there, 0.28% for Brent crude, $63.19 a barrel. We see WTI crude still trading below that $60 level, $58.69, down 0.25%. So we're still seeing pressure right there. The benchmarks again by 1.3% on Monday. As rising doubts about a peace deal to end the Russia-Ukraine war reduce expectations for the unfettered flow of Russian crude and fuel supplies, which are under sanctions, from Western nations. So we're still seeing geopolitics there driving sentiment in the oil market. Let's get a quick check on metals now. We're seeing oil prices ease today, slipping from an over 1 week peak. As the dollar, that held firm while investors await a batch of delayed U.S. economic data that could help refine expectations, for future Federal Reserve cuts there. And it's green on the screen for the metals that we track. We see spot gold there sitting pretty at 0.88% up, $4,130 per ounce. U.S. gold futures, big 1.20% uptick there. So it's looking good. With spot silver 1.13% up, getting back above the $50 level per ounce. Platinum 0.33%. Then we see a mild 6 basis points rise for palladium, $1,433 per ounce. So that's a picture right there with the metals market and the oil market. But let's take it on to Europe now. Some big names in the European fashion industry are under fresh scrutiny. Together with the European Data Journalism Network, more than 450 sustainability and transparency pledges from 17 major fashion brands have been evaluated, revealing exactly how serious these companies are, about when it comes to delivering on their climate and ethical promise. Let's talk to Varda Emrah now, a DW correspondent. Great to have you, Varda. But before we get into that, let's turn to European markets. How's it looking over there?
Thanks, Laddie, for having me. Happy to be here. Yes, let's talk about the markets first. So the DAX opened today unchanged from yesterday, but turned negative during the trading day. Trade analysts here are saying that investors seem to have no clear guideline and are just acting on impulse, hence the red and green in the DAX today. The mood on the stock market is shaped by these mixed signals. However, it still is the case that the DAX remains below its 200-day average. Another analyst says that historically, a year-end rally takes place in November. And so November usually is one of the best months of the year in that way. However, this November, Germany's leading index is in red territory. Even now, the DAX is only sitting at 0.08% after pretty much being in the red all morning. And the pan-European index stocks 50 and stocks 600 were also in the red, but are seeing slight gains now of 0.08% and 0.01% respectively.
And Varda, we know DW did a joint investigation with the European Data Journalism Network on whether fashion companies in Europe are as sustainable as they say. Tell us about the findings of this investigation.
Yes, this DW investigation into big European fashion companies did not yield very surprising results. Many of these were expected. So, across 468 commitments from 17 companies, only half of these have been honored. And these include, targets on emission reduction, having more sustainable materials, being more efficient with waste and energy. And only one in every three promises made by these companies were fulfilled. fulfilled. So Zalando, an example of a European fashion company, failed the most of its commitments. Now, my colleague spoke to Zalando on the matter, and the company admitted that they had fallen short on their sustainability promises. Other companies such as Mango, the brand from Spain, Primark from Ireland, and OVS from Italy have a lot of vague language around their targets and keep dropping and picking them up with little consistency. Now, what's also interesting is also which company was advertising or talking the most about sustainability, and it was H&M with 49 commitments. Only half were honored, and the second company with the most pledges was Adidas, which honored a little over its 28 commitments.
All right, Varda, thank you so much for giving us the details there, and definitely we'll get more updates tomorrow. Thank you so much, Varda.
Thanks, Laddie.
All right, yeah, so I said today it's the focus. It's all about inflation, interest rates, and right here in Nigeria, we're going to get the decision for this. That's the final one for 2025. But let's get a quick check on what played out on the African continent. That's for inflation trajectory for Ghana and most of the top African economies, and how the MPC in those countries, how they delivered when it comes to interest rates. And see for Ghana there, inflation rate that's at 8% from the levels in October, down from 9.4% in September. You know, driven by easing food and non-food prices, inflation remains at the 6 to 10% target for Ghana. And we see the Bank of Ghana held its benchmark rate there at 21.5% also in October. We flip over to Kenya now. Kenya's inflation, that was unchanged at 4.6% in October 2025, remaining within the central bank's 2.5 to 7.5% target range. We see to boost growth, the Central Bank of Kenya cut its policy rate to 9.25%. There you have it in October. And we'll take it on to Angola now. The inflation rate dropped to 17.43% in 2025, continuing its gradual decline. Then also in Angola, we see the central bank, they cut their interest rate to 18.5% from 19%. That's for Angola. Then we see South Africa, inflation ticked up there to 3.6% in October 2025. But despite this, the South African Reserve Bank, they cut interest rate to 6.75% from 7%. So we're seeing the cuts playing out there. Then for Nigeria, recap now, 16.05%. That was the reading for inflation in October from 18.02% that we see for the last meeting, you know, following the rebasing of the CPI data there. We got that number. Then for the last meeting, we see 27% with a 50 basis point cut right there in Nigeria, not following the 25 basis point was bigger one there, but we're expecting, analysts say we might get a bigger cut, you know, in this meeting. We'll definitely look out for that. But you just hold on. We're going to bring in our guests to help us unpack what to expect in this meeting, and definitely after we get the decision, we'll discuss how that's going to impact the economy going forward. We'll take a break now. All right, so it's a D-Day, and definitely we're going to get a decision after the meeting that started yesterday with the Central Bank of Nigeria Monetary Policy Committee. Remember, for the last meeting, we had a cut there about 50 basis points that took the interest rate from about 27.5% to 27%. But let's get a snapshot now of Nigeria's macro data. We'll see last inflation rate there, 16.05%, monetary policy rate, 27%, just to give us a picture of what we're dealing with the economy so far. Exchange rate, that stands at 1,453 naira to the dollar, according to central bank numbers there. 91-day Nigerian treasury bills, that's at 15.3%. So that's just a quick snapshot of what the Nigerian economy is saying right now, looking at the macros. And, you know, definitely we're seeing consensus there. They're expecting another cut at this meeting, and definitely we'll be looking out for forward guidance. It's not always about the action of central banks nowadays. We also need to listen closely to see what, you know, the MPC is seeing coming next, you know, at this point. What's the forward guidance saying? Investors will definitely be paying attention to that. And we're going to unpack everything and what's played out with the Nigerian economy and what to expect, going into 2026, and if these rate cut cycles we're seeing will continue, and if inflation continues also going downward. To help me unpack this, I'm going to be joined by Mr. Paul Alaje now, as a senior economist, SPM professional, joining me right here in the studio. My second guest will join us, at some point. Mr. Alaje, it's great to have you.
Thank you so very much.
It's another one, another rate-setting meeting. And definitely, before we get into what's playing out in Nigeria, if we look at the continent, so far, we see for Ghana there, inflation, that's dropped. At this point, they're doing single digits.
Yes.
8%.
Yes.
And I don't know if you remember, like I do, we're at 50-something% at some point. That's for Ghana's inflation rate. And that drop was so dramatic. It almost seems like it never happened at this point. How do you see that?
Well, a number of factors, which of course is also playing out in Nigeria, in our matter. Incidentally, only recently, 2 Saturdays ago, we had a colloquium and we brought in the former Central Bank of Ghana and also a king in Ghana, King Adamte. We all converged at NAF Conference Center, and this was exactly a question that one of the Nigerian journalists asked. How so dramatic that Ghana's inflation came down so sporadically, and they've maintained single digits ever since then? The response, hearing for the horse's mouth, those that were in charge of monetary policy in Ghana, what happened was that there are 3 effects that Ghana experienced. One, relative stability in exchange rate. Is Nigeria experiencing relative stability now? My answer will be yes. It's not about whether the value is more or less. What I can say for stability is that the number is stable, around 1,400 to 1,400 naira to the dollar to 1,460 to the dollar. As we speak, as you rightly mentioned, Central Bank says it's 1,453. Nigeria, however, is a very interesting country because any little thing can affect all our economic variables. Before now, it went to 1,430 until a higher level of insecurity and insurgency, kidnaps, and we saw one of the missions to Nigeria mention issued actually a travel advice to the citizens of their country and those that work with them regarding the uncertainty as has to do with security. But second thing that happened with Ghana, some items, especially food items, started coming down. Meanwhile, price of real estate remain high, house rent remain high. Is it the same for Nigeria? Incidentally, yes. Some food items in Nigeria started coming down. Some are still high. However, you cannot say the same for transport. You cannot say the same for housing. The two remain the same. The third, which is the most important, and which is also in the case of Nigeria, is base year effect. The base year effect, Ghana changed base year, Nigeria changed base year from 2009 to about 2002 to 2004. And you know that the economic prosperity in the previous base year were high compared to what happened in 2023, 2024. We saw how the economy ended those periods. So it is just expected for inflation to come down. Now, the rate at which it comes down has to do with all other efforts that are coming in from fiscal authority to work with the projection of monetary authority for those to come down. And you can see that monetary authority in Ghana have since taken interest rate back to a moderate, manageable level that is not so going to cause discomfort for the private sector. And carrying out investment in Ghana has reduced. And for today, I'm also expecting a cut, 50 to 150 basis points. That is my expectation. It should be within that range because when you overdo it, it might fuel inflation again when money supply increases. And that will have implication on a number of other things that are within the financial market sector. So we're expecting a rate cut. What I know we will not do is to increase rates. That is a no option.
I think that's out of the...
It's out of the conversation.
Right.
But to hold, the chances are very slim, about 30%. But the higher percentage here is rate cut. Why? Before this last meeting, I think 2 meetings ago, I had a conversation with you with another gentleman. Last meeting, I'm not sure I was in your studio, but here is it. The last meeting showed inflation was around 18%, 18.2%, 18.02%.
Today,
yes. It is 16.05%, approximately 16% comfortably. Inflation has dropped 200 basis points, which is about 2%, which is okay. So if we look at by how much inflation has dropped, then we can say for macroeconomic sake, the stability in exchange rates, the stability in some food prices, and the effect of base year, they are all accounting for this. So if we must therefore take decision is how do we, as inflation is dropping, make sure that private sector is not having some setback, or we are not affecting them financially. Perhaps that is why I think Monetary Policy Committee today will come up with their report, and I can tell you the whole Nigeria is waiting, because right now we're at a very critical position in our economy, not just for economy, but other things that is attached to it.
You know, it's quite interesting. You did mention the exchange rates, you know, the effect, you know, we're seeing on inflation. Definitely, we've had that stability for a while now, and we've been seeing inflation, you know, dropping, and we're not, and mostly for urban inflation. If you compare urban and rural inflation, you see that rural inflation is actually moving higher than urban inflation, which wasn't the case, you know, before now. And some say because of what we're seeing play out with the dollar, you know, against the naira. So that is helping urban inflation because we mostly import stuff, you know, in the urban centers. So without currency stability, definitely inflation would be...
Yes, it will be out of the window. If there is no currency stability and you have even base year effect, the rate at which it dropped will not be this fast, because between March and now, we have seen inflation more than half. It was 34%, today it's about 16%. That's more than half. Although many are asking me a question that, hey, you an economist, you are supporting the inflation drop. I say, because the new methodology says it's drop. It is not voodoo, it is what the number says. Now, you may not experience it directly because we now have base year effect as part of the components. And I was quick to ask, are you saying no food item or some item have not dropped at all? The truth is that they have dropped. Also, the cost of iron in the market, because we don't just monitor what happens in the market, we also go to construction and monitor what is happening. We have seen that iron rod has also stabilized around 1,050,000, in some places 1,060,000. It went as high as 1,150,000, 1,160,000, 1,200,000. But if you compare that to where it was coming from in 2023, of about 550, 580, 600, then you know that, yeah, for those in construction, they might be looking at the past, or you are looking at recent past. So the question is, which of these are you looking at? The recent past, where it was 1,070,000, 1,180,000, 200 in some markets, or you are looking at the previous past of 2022, 2023, where it was about 400, 500, in some places 700. So the comparison is important so that people can make informed decisions. For me, I have seen stability, and I think that this stability should be consistent. We might not be able to go back to 2022, 2023 because of all that parameter that has changed. The economy is very dynamic. It's not static, it's not monotonous, it is live.
And it's moving, it's live, you know, at this point. But there's so much to unpack. But we'll take a quick break now. And when we come back, we'll go to, you know, other matters. Then I'll also be joined by another guest. That's in a moment. Just stay with us. Welcome back. Well, we're still unpacking what to expect for this Monetary Policy Committee meeting. That's the 303rd one and the last one for 2025. And I did tell you another guest is joining us, and he's right here with us. Mr. Robert Mortonde is a partner, MDU Consulting. He's joining me right here in the studio. It's great to have you, sir.
Thank you for having
me. Welcome. Yes, it's the D-Day.
Oh, yes.
Definitely, we've had a couple this year, and about, I think this is 11th under the Olaime Cardoso leadership. So definitely I've heard from Mr. Alaje what he's seen play out, you know, so far. And definitely we did talk about, we talked about Ghana and other, you know, countries, major economies on the continent, and seeing that Ghana's inflation, that has dropped from a massive over 50% to about 8% now. Current interest rate about 21.5%. We're seeing Kenya 4.6%, Angola 7.43%, South Africa 3.6%, Nigeria 16.05%. So when I see all these other countries, I get a little jealous when I see the inflation numbers.
You know, yeah. So, I mean, if you look at the inflation trajectory, you cannot dissociate the rebasing exercise from the figure we are seeing right now.
Right.
And of course, that rebasing exercise came with a new base, you know, which has now impacted on what the figure you're seeing right now. So at 16% and a target of 15%, say by the end of the year is not unachievable, because
It
again,
looks within
yeah,
reach
it's,
at
it's,
this point.
it's not
But it's
unachievable.
important to say that as of the time the promise was made,
Yeah.
rebasing was not in the conversation.
There was no rebasing then.
There was no rebasing. But
Right.
then, if you see government as not just a continuum, but that government is not working at cross purposes, maybe when the promise was made, there was an inkling as to whether there will be a rebasing or not. But I mean, that is just by the way.
That's aside.
Yes, it's aside. Because rebasing exercise is a valid econometric,
Yeah, it has to be done.
or statistical,
Every 5 years, I believe.
exercise that any country should carry out. But I think the point is to say, when you compare us to these other African countries, and of course the global economy at large, and it's important to dimension what has happened globally over the last 4 to 5 years, or let's say 3 to 4 years, especially with the invasion of Ukraine by Russia. That created another phenomenon that we call the great inflation again, in the 2020s. That is post-COVID.
Right.
And the result of that has been that a lot of countries had to grapple with this phenomenon called inflation. And it raised the ugly head in many respects. For US, UK, there was a time we had the respite, and then came another phenomenon, the emergence of Donald Trump.
Right.
And that also threw in another, dimension to the inflation story. Of course, everybody is going towards that respite where, yields and, inflation levels are now moderating. So, but in terms of comparing Nigeria to the other countries, if you see this trajectory that we have started, where the base effect is now impacting on the system. Look at almost 2 percentage points of movement from, September reported headline inflation to the current inflation that we're seeing. I would say that at best, apart from rebasing exercises, the last time we saw this was when there was subsidy removal in 2011, and then people took to the streets, right? That's how much of impact.
2011.
Yes, 2011, when you saw, during that time, Governor Lamido Sanusi was central bank governor, and then in one move, we saw inflation rising by almost 2 percentage points. So normally in the normal course of economic activities, that wouldn't happen. So I still attribute it largely to the rebasing exercise.
Right.
And we may see this effect play out more and more. November, up to November, I think, the rebasing year or month was November of 2024. So we will still see this play out up until November 2024. And I dare say maybe up until March. Because even though the rebasing was referencing November 2024, that the real exercise happened exactly in March. Yes. So it's not unattainable to expect Nigeria to move gradually closer. Maybe not a single digit by the end of this year, but I just say that a 12 to 14% is not impossible.
Right.
Before the end of the year. Then when you get into the new year, and with some of the gains, you can't take it away. We've had gains, especially because if you look at the currency market, we've had some stability, right? The accretion in the reserves up until what we are having currently, $44.1 billion, And if you check, you will see that since that, Eurobonds issuance, you've been seeing that daily increase. And it will happen for maybe some more days more. Because, the reserve is reported a 30 days moving average. So once you have an inflow.
We did touch 46. We did touch 46 billion.
Yes, at some point.
Yes.
But then the point is that currently you are 44.1.
Right.
There are other, events happening that will affect the reserves. More inflows are coming in, either by the way of FPI. The central bank is also doing its intervention. All of this has effect on the mathematical computation of that reserves, because it's not as you see it. As you say, it's a 30 days moving average,
exactly.
just to normalize and have a more accurate picture for the country. So all of those gains that we have seen on the currency side will also impact on headline inflation going forward. So it's a good day. I was at another program and I was talking about the performance of Governor Cardoso, because you're talking about 11 months sorry, of, I mean, 11 MPC meetings
Yeah, he's had 11 meetings.
that he has had.
Right.
You know, if you look at it, when he came in, it was chaos everywhere. Currency, inflation.
Yeah, we know the story.
You know, and
we
all of
almost
this.
reached 2,000.
Absolutely.
To the
We already,
dollar.
yes, because we got to 1,860, right? And there were projections of 2,500 exchange rate naira to the dollar. But then, you know, you won't take it away from the administration and what has been done so far. But then, is this the time to rest? No, not yet. There are still risks on the horizon.
Right.
You know, there are things that can still be done better, right? But I will rest my case
All
for
right.
now.
But
Yeah.
so, Mr. Laja, talking about you know, the risks, you know, still being there at this point, you did mention also that, you know, rents are still high, rents are still rising. So even though we're seeing, you know, food inflation, you know, coming down, we're seeing food prices, even though the rural area, I did hear that in the rural side of things, food prices are rising, you know, higher because what's playing out with, you know, at the farms, you know, right there. So when do you think, you know, because we still keep talking about the base year effect and all of that, when should we expect to start taking, when we start, stop talking about the base year effect, you know, when it comes to inflation report? When do you see that, you know, coming?
Okay,
When we say, okay, this is what is happening. It's
okay,
not really about base year.
Okay, so what we should also pay attention to is month-on-month effect, because it is within the same base year, but we are comparing month-on-month, but it's a short period to know what is happening, you know, almost immediately, an immediate effect or impact of inflation. Even though we have seen some drops in inflation, those month-on-month, sometimes they increase, they show higher numbers. Now, as an economist and someone who deals with the numbers, whatever we see now, I've kept saying it, we have to be very careful not to make significant policies with them because of base year effect. I mentioned to you that it is not just base year that is driving reduction in inflation. There are three factors at least. And I was quick to compare Nigeria to Ghana. One is some food items that dropped. Secondly, stability in exchange rate. Thirdly, the base year effect. If you ask me which one took the larger percentage when you disaggregate this number, and that is possible in economics, it is the base year effect because of the quantum drop between 34% that was reported in March and 16.05% that was reported in October. So when should you know? First of all, you need to know the true picture of inflation. And how you know is not the percentage that is reported. It is the growth rate in the percentage. There are two different things. The percentage might show 16%. From April next year, you will now compare the growth rate for April 2025 to growth rate in April 2026. That is how the number is treated. Have there been effort put in place for us to achieve some of these improvements? The answer is yes. We have made some improvement. However, there are risks that are still there. More than ever before, prices of real estate-based items are increasing more than ever before. However, all other commodities prices, which includes some food items, are dropping. So the impact is exactly what economics are after. And this had impact on the lives of people, some impact, yes, and to some persons, they might feel they cannot feel the impact yet. So how do you get people to feel the impact? First of all, we need to know when we disaggregate the base here, which is just a function of numbers, from the direct impact, whether foods are coming down or things are happening, that will be a bit clearer. You know, a woman that is pregnant goes to, say, a lab and wants to know the gender of the baby. When the pregnancy is only 2 weeks or 3 weeks, I think the lab scientists will say that wait for some time, let the baby mature before we can use scanning machine to decide. I don't know if the world has discovered another equipment that will even decide the gender of a baby in 1 day or 2 days of the pregnancy. But for what I know, you would have to wait for some time. And I feel that for us not to be posting outlier as a real number, when I say outlier, for those who are not familiar with the number, I'm not saying it's a lie. I'm saying that it is not a regular occurrence. So for us not to post outlier and start assuming based on the outliers, it's important for us to wait till April to know. But does that mean that we cannot adjust our NPR? The answer will be no, we can. And that has to be done really very moderately. And my advice, which of course is what I've recommended even in the print media, is that MPC should consider between 50 to 150 basis point reduction. At this meeting, what should not be done is to look at a possible increase, because already we have seen crowding out effect of private sector. We have seen a number of unintended effects, because when economics is a trade-off, it's a study of trade-offs. When you take a decision, you know something else will happen. So it is not going to be a surprise that, to me, if I see a reduction, if chances for holding rate is on the minority, or is about 30%, but chances of reducing further. Why? Because of that quantum reduction. 2% reduction, 200 basis point reduction from 18% to 16%, I think is significant. But I would not want us to also reduce rate by that amount. You know, somewhere around 50 basis points to about 150 basis points will just be fine.
And, you know, definitely there's all that talk about insecurity and, you know, the designation as a country of particular concern. Is that something that should concern this MPC, in your opinion?
Well, you know, in the normal dealings of things, the Monetary Policy Authority has its mandate and its focus, right? There are some aspects of, you know, the overall economy that affect the decision of the Monetary Policy Committee, right? One of which is, if there are insecurity issues in the country, it will definitely impact on, you know, macro variables that are of concern to the Monetary Policy Authority. You know, so to that extent, insecurity in the country, how does it feed into these macro variables? Let's pick inflation. If you have insecurity in, you know, the food basket of the country, that is where our food normally will come from, you know, the Middle Belt and the rest of the other states, the implication is that maybe farmers cannot go to the farm, or, you know, they get their crops destroyed in the farm. The aftermath is that during harvest season, they have less to report, you know, and the implication of that will also feed into price, because supply is now limited while demand remains or has increased. So the implication is that there is a higher, you know, price that people have to pay. Then that worries the Monetary Policy Authority. I think at the meeting, what the authority will be able to do is to make an appeal to those who are responsible for the security architecture of the country. Definitely not the Monetary Authority, you know, but of course, whatever they have to do will then impact on the decision of the MPC. You know, I don't know whether I should touch on, you know, the issue around whether the Monetary Policy Authority should hold or to, you know, increase,
right.
I'm sorry, reduce.
I don't want to speculate
FPR.
now, but I think because the meeting
Yes.
is going on right now, we're still
yes.
trying to get that, you know, feed. But I'm hearing word on the street
that,
you know, at this point, I'm going to get confirmation, you know, soon, you know, on that
Yes.
decision. But at the end of the day, if it's a hold, is it really that bad?
No, it's not bad.
It's not bad.
Because if you look at the objective of the current central bank, the posture is you want to run a central bank that is conventional, not the unorthodox, you know, measures that the erstwhile administration had, where the central bank was into, you know, apart from anchor borrowers program, a lot of development, you know, finance agenda, so to speak. But, you know, this central bank has said, see, we are going to run a professional central bank, which means that we will monitor our key variables, you know, and take the appropriate monetary policy actions. And then if you look at, check foreign portfolio investment data, you know, at least as far as we have for Q1, you will find out that the bulk of the flow that we have, the aggregate of both FPI and FDI, you know, has been majorly from the money market, you know, has flowed into the money market segment of the market. And what's the central bank doing that? I mean, doing in that space? A disaggregation of, you know, the participants or the players of that market, which has been done even before now. But then what you see is that in a market where you have OMO rates, OMO yields going for as high as 25%. But then when you look at Treasury bills yield, you are seeing them at an average of 18%.
Right.
You know, that gap. So that is attracting a lot of foreign portfolio investors into the market. Now, if you go to the original intent of having benchmark rates in the first instance, you know, as we economists will discuss it,
right.
You know, the benchmark rate is not supposed to distort the overall working of the market. It's just a way of the government controlling the market. It's a kind of market control. You know, ordinarily, the market the forces of demand and supply will fix the equilibrium interest rate in the economy. But then the government has some certain objectives to achieve, because if you leave everything to the forces of demand and supply to dictate, then you have no control.
Right.
So
anyway, it's official.
It's official.
They've held rates. Yeah.
I
just got it now.
So
27%.
27%.
Yeah.
And that was my argument, which is to say that holding it is not bad at all. The point is that because the central bank is targeting an objective, but then there is already a disequilibrium, because you have policy rate at 27%,
right, and
then you have market rate, the real market rate, at 18%. That is for treasury bills use. You have some other commercial rates that could track as high as 21, 22%. But then you have OMO rate or OMO yield at 25%. So that 25% is doing something for the central bank at this point, is to attract foreign portfolio flows, because the stability in the currency market we are analyzing is as a result of the capacity that the central bank has to defend the naira, and that is coming from all the flows. FPI is becoming major at this time, because of course when you look at your net proceed from export, it will hurt some things, right? But then the ones that directly hit the balance sheet of the central bank, these foreign portfolio flows.
So that's the FPI.
Yes, the FPI.
Let me go to Mr. Alaji now. So definitely it's hot money, it's FPI, and when you see that designation, a country of particular concern, that is bad for FPI, isn't it?
Very, very. So, the world is going through what we call durable disorder. And Nigeria is not going to be exempted from durable disorder. It can be classified into two, even though the two are intertwined: economy and non-economy effects. In the global durable disorder, and this was mentioned by one of the renowned America in terms of security, who also had understanding of economics. Now, what you have is insurgents has not been with us before 1990s, even before 2000s. We started experiencing it. Now, where did all of this start from? It started majorly, perhaps you want to call it, in the Arab world or so. But look at all of this. Every country that has not been able to deal with prolonged, or what I call the durable disorder, what happens to the economy? They remain almost at average level. So this has direct effect on economy. So what you're going to see beyond the politics and the economy, because with all the gains we seem to be having, one major security concern, which we have started seeing the introduction, can reverse some of these gains. And that is why all Nigerians must unite against insecurity, irrespective of political party in office. If we think that, it is not my favorite party that is in office, or not my favorite tribe, or not my favorite religion that is in office, and we gang up against the leader of a country at a time, honestly, we are all playing with fire. What we must do, therefore, is to ask government, hold government accountable for the security of the country on one hand, and also speak against whosoever that has constituted insecurity to our country. Because when you are dealing with this durable disorder, it's a long journey. It's not just walking in the cool of the evening. It is certainly a marathon. It's not a sprint. And I tell you, you can take my word for it. Don't believe me, go to Afghanistan and ask them. Go to what has happened in Somalia and ask. Go to Kosovo. Go to many countries around the world. Some have even disappeared because of what we call durable disorder. It raises its head in two ways. One is economy, the other one is security. Now, talking about holding rate, like I said, it is what majority, especially in private sector, would expect. When I'm saying private sector,
I'm a little curious at this point. Seeing that they held rates right now, is it because of what's playing out with the CPC?
No, okay, so that could be a factor. Honestly, that could be a factor. But beyond that, when you look at the interest of central bank, the interest of central bank, one of the things central bank had mentioned, they feel the increase in our reserve is also accountable for stability. Mark you, let me link that to inflation for you. When I came here before Mr. Robert came into the studio, I mentioned there are three factors. One is reduction in some food items, some, not all. And I also mentioned another broad sector such as real estate that instead of reduction, it has actually increased. So one would expect that that increase should have net off. However, one thing we all cannot deny is the stability of exchange rate. And watch this. As of this time last month, exchange rate was 1,430. Today, according to central bank, is 1,453, which means it marginally increased. We can still account for it as being stable. Now, if you are not too mindful and we reduce rate, according to them, I'm thinking, such that the cost of the returns, the cost of borrowing, which is the cost to central bank, but investor is returns to them, if that reduces, an increase, 0.5% increase in returns to investors around the world for United States, we mean some investors will leave Nigeria. One, because of exchange rate stability, which is the obvious answer here. So the point is, if they are increasing rates for this time, a number of factors can cause it. America pronouncement of Nigeria, President Donald Trump pronouncing Nigeria as a country of particular concern. Two, the recent uncertainty in the system. It has to do with insecurity. Three, concerns as to how will that affect the inflow of portfolio investors, because all governments, since have been monitoring the Nigerian economy, want investment to move. They want to shake it from portfolio investment into real sector, to the real economies, but that has not happened. At best, we have not seen more than 30% of that proportion favoring 70% favoring portfolio, while 30% favor others. So how do we change that? I think that one will be beyond the interest of central bank. It is now the subnational that is attracting this investment directly that will ensure that they create the environment, and in partnership with private sector in Nigeria, such as energy sector and a number of other sectors. But in all of this, people are weary about coming to Nigeria to invest, knowing fully well of what America is thinking of Nigeria at this moment. Secondly, knowing fully well of insecurity and what we have seen on social media about bandits and insurgents even coming on social media, revealing their faces. It will be a concern if we say, let us reduce interest rates, because that we already have the fundamentals saying Nigeria may not be a destination where they want to invest because of insecurity. But mark you, insecurity, like I said, durable disorder, when it manifests as insecurity, the ultimate goal will be economy. When it manifests as economy, it will show in insecurity and go back to economy. So the effect we are suffering from is a durable disorder. Remember, it's not going to be a sprint, it's going to be a marathon. So that is why we all need to unite as Nigerians, forgetting our tribes, forgetting our religion, forgetting our places of residence. Let us unite against it, because insecurity in one place has major economic effect, not just on our market, but overall economic outlook.
All right, and definitely, I did tell you the central bank governor, he's been briefing since 2 p.m., but I believe we can join in now.
There's more exports. There's a drive for greater exports, and that's why you find that increasingly being the case for non-oil exports. Of course, for the oil exports, there have been increasing production, and we have come a long way from where we previously were on that particular line. Then, of course, you go to the IMTOs, the international remittances. All those have gone up relatively positively. And the good thing about all this is that we are building the reserves on a very systemic basis. Of course, because of the reforms that we are undertaking, portfolio investors are finding investments in Nigeria attractive, and they are coming to invest. So collectively, all those have contributed. And of course, we are operating a more open and transparent system, which gives confidence to those who really and truly want to be in a country where they believe in its future. I don't understand what you're saying.
Good afternoon, Mr. Governor. My name is Major PoliticsToday. With a spread of less than 2% between the official and BDC rates, it can be said that the Naira is currently stable. How can you guarantee that this stability is market-driven and not policy-driven to offer temporary success? What specific reform or market mechanism are ensuring stability? Thank you, sir.
Now, again, let me go back and say something about our foreign exchange market. You see, what we have in the foreign exchange market in Nigeria today, to the best of my knowledge, is something that hasn't happened before. It hasn't happened before, in the sense that you have a market where there are willing buyers, willing sellers. They come in, they buy at will, they sell at will, and you have a process that is open and very transparent. And our EFEMS system is one that is open and very transparent. So you can see who is buying, you can see who is selling. It is that that gives confidence to markets. Policy rate hikes to sufficiently transmit to the real economy and further reduce prices. Members noted that the robust performance of the external sector, evidenced by the surplus current account balance and steady accretion to reserves, which have contributed to stability in the exchange rate and moderation in inflation. The MPC also commended the collaborative effort of both the fiscal and monetary authorities, which led to the recent upgrade of Nigeria's sovereign credit rating by major credit rating agencies and the delisting of the country from the FATF grey list. Members acknowledge that these positive developments would further boost investor confidence and improve capital flows to the economy. The committee noted with satisfaction the sustained resilience of the banking system, with most financial soundness indicators remaining within regulatory thresholds. Members also acknowledged the substantial progress in the ongoing recapitalization program, with 16 banks achieving full compliance with the revised capital requirements. The committee thus urged the bank to ensure a successful implementation and conclusion of the program. Price and other domestic developments. Headline inflation year on year further declined to 16.05% in October 2025 from 18.02% in September. Gone are the days where you have to front load and be looking for foreign exchange all over the place. Those days, I'm sure many of you witness it. You can go with your Naira card. You can pay with your Naira card. If you choose to pay with your your dollar debit card, well, that's your choice to make. But the choices are there. And the fear that used to permeate that industry and that market has literally disappeared. In actual fact, Nigerians now are very happy and very proud to hold the Naira. A good thing.
My name is I'm of Vanguard.
Yes. Yes.
The government and of course the key have celebrated the removal of Nigeria from the grey list of the Financial Action Task Force. I want to know how, in practical terms, will this removal affect the inflow of trade finance, of foreign investment, as well as remittances from Nigerians abroad into productive areas of the sector. Thank you.
Thank you very much, Ina. Thank you. Now, let me say that the removal of Nigeria from the gray list is way beyond just a compliance issue. It's way beyond just a compliance issue. In actual fact, that is the easy bit. That is the easy bit, to be able to say, oh, we have complied. We have complied. But it has a lot of implications for Nigeria and Nigerians. As you know, for the past over 2 years, we have been on this gray list from FATF, which is the international body that more or less tracks and monitors illicit flows. Our exiting of that is a clear demonstration of the fact that, one, Nigerian agencies, and I must say this, collaborate very well when they choose to surmount problems. They collaborate very well. The central bank, NFIU, SEC, EFCC, Ministry of Finance, we can mention all of them. All the security agencies, incredible collaboration. And this is one of the things that was given special mention when the FATF team came to Nigeria for the final time before deciding whether to remove Nigeria from the list or not. It was cited as the #1 issue, that they could see close collaboration between all the different agencies, and the Vice President of the Federal Republic himself came personally, chaired the event, and commitment from Nigeria exit that particular gray list. So it is not something to be taken lightly. The bigger challenge is to maintain what we have been able to accomplish. In a similar way, I spoke about stability. When you are able to achieve stability and you want that growth, which Nancy spoke about, you must do everything possible to protect it. If you fail to protect it and you go back, you bear the consequence. The FATF gray list, we talk about us being on it 3 years ago. Before that, being off it, we were on the gray list 3 years ago. Before that, we were not on it. Let's remember that. We were not there. So certain things happened that made us now go onto that list. And there are positives, to answer your question, for not being on that list. One of which, of course, is that it shows that you are prepared to meet minimum global standards, which is very important. Minimum global standards. It's like the rating agencies. When rating agencies come and they give you a positive outlook, everybody else follows that cue and say, well, if they have done their work and they have been prepared to do this, it's got to be good. It has met a certain standard. It's the same. The exiting of Nigeria from the gray list is a very positive signal to the international community, to investors, even for international correspondent banks who deal with Nigerian banks. Once you're on the gray list, they're a little bit more, well, actually, very much more reticent to want to deal with banks. But once you're off that list, it makes them more likely to want to deal with you, and pricing becomes more competitive. Similarly, for those who inflow the IMTOs, the international remittances. When you're on that list, you're almost like a pariah. When you're off it, you find that international financial actors are more willing and able to negotiate pricing with you and to ensure that they deal with you as they will deal with others. So the long and short of that is that I believe this is a good thing for Nigeria. It contributes significantly to the bottom line of all the different economic actors. And for our country itself, it promotes financial system stability.
Good afternoon, everyone. My name is Musa Abubakar with NTA. Mr. Governor, with just about 4 months to go in the bank recapitalization exercise, we would like you to give us the status of the exercise and the status of the industry as
Well,
well.
let me again say that we talk as central bank about creating buffers. We talk about creating buffers. And we have been doing so, as you have seen, over the recent past. We have been doing this. So with the commercial banks, they too are in the process of creating buffers, because this is exactly what comes as a result of the recapitalization that they are presently going through. 16 of them have fully complied. 27 of them have, through various means, raised capital. We are monitoring the developments, and from every indication, it is going in the right trajectory. We feel that we are in the stage of building a financial industry that will be very, very, very fit for purpose in terms of building, one, what we spoke about earlier, the buffers, and also being able to support the country into the next years. Many of you will also know that many of our banks are out on the African continent, and they have been innovative in various spheres. Again, these buffers that they are creating will help them to be in a position to better navigate the risks in the multiplicity of countries in which they operate. And in return, that helps the Nigerians as well, the Nigerian traders, the Nigerian individuals who go across all these various geographies. It's a thing, it should be a thing of great joy and satisfaction to know that you have your own banks out there that understand your peculiar needs and are able to respond accordingly.
Mr. Governor, good afternoon. The cooperation or collaboration between the monetary authorities seem to be visibly creating the right results, at least for economic watchers. So, how do you hope to sustain this collaboration to ensure that we now have a better economy for Nigerians, at least for the good health of the Nigerian economy? Thank you.
Thank you very much.
All right, there you have it. We have the decision there. It's retained, 27%, and definitely sorry we didn't get you to the governor on time, but yeah, that's it. That's the verdict for the last meeting in 2025. And I still have with me right here in the studio Mr. Paul Alaje and Mr. Robert Motunde. So at this point, before now, consensus was another cut. But no, we have a hold, at this time. So the governor did mention a couple of things there. He did talk about, he said Nigerians are happy now. When it comes to the Naira, there's more, confidence. You can take your Naira card now and you can spend abroad. I did try it and it worked when I was out of the country, at some point. And he also talked about the FATF grey list exit. Let me get your reaction, Mr. Paul Alaje.
Well, truth be told, there's been an improvement within that market, in the currency market.
Right.
Unlike before, where you have to front load, you have to get a dollar card, then when you get abroad, you now spend the dollar card. In fact, in some cases, you still need to take permission of your bank before you spend. If not, they will lock it. You won't be able to use it. But that flexibility, confidence has been restored to some extent in Naira. But we don't need to say that the confidence now is absolute. It's important for us to know that we have made some achievement, but there is still more to be made for me. Also, regarding the list, I think it's better than where we were before. I've seen some improvement, on both sides that the central bank governor has mentioned. And I must also say kudos to him and his team, because I've seen some relative improvement compared to where we were. Remember that when he came to office and some policies were made, I was one of the persons that perhaps was always on the neck of central bank when the policies are not right. And a number of times I've also said when the policies were right, because one person said, no, you've criticized it, just stay permanent. I said, no, that is not economics. Economics is about the living standard of the people. When your policy will result in poor living standard, we would say it. When your policy is hard enough, we would also say it. If not, we'll be manipulating the mind of the people rather than educating them. So when you are doing well, we would say it. When it is wrong, it's also important that we discuss it, analyze the implication. The implication of what we have done today is what I've just told you in terms of what does it mean? Why did we even have to, why should central bank even consider it? More so the private sector, the investors in Nigeria, I'm talking of those that are investing in real sector. Investment is in two fronts. You have the real sector investment, you also have portfolio investment. But countries will ask, what is our priority for now? Do we want stability in exchange rate, or we want increase in production, or we want to reduce the crowding out of employment? So central bank, being a monetary authority, is particularly responsible, among other things, for stability. Stability in price and stability in FX. So if stability in FX is the goal, then they will make their policy to ensure that there is that stability. However, fiscal authority and trade authority, they have their own responsibility. And this is why, unlike how, people are used to central bank coming every 2 months to discuss what the monetary, whether you like it or not, this is monetary briefing. We call it monetary policy committee, but it's monetary briefing. When was the last time we had such from fiscal and for trade? So you're going to see, because the way journalists monitor central bank, maybe because of course most central banks are independent for most parts of the world. But for fiscal authority, maybe when we are presenting budgets, that's when all of us start paying attention. And fiscal authority is also not centralized and central bank. You have individual states have their own fiscal authorities. You have the federal. And when we talk about coordinating the entire system, these perhaps are part of the things we're referring to at a time.
Right. All right. I would like to get your own reaction to Mr. Amotoday. But before we go into that, I did get a peek into the stock market. We had a negative close last week, started off the week down, but it's positive today.
Well, it's not out of place to see that volatility happen, in the market. The equities market particularly has been so rewarding in the last few months. Just like the central bank governor saying, Nigerians are happy now. I'm not so sure about that, right?
I guess happiness is relative.
Yes,
Yeah,
happiness
very
is
relative.
Right.
It's relative, but there have been a lot of happy people on the bourse of the Nigerian exchange group, and it's also tracking some of the developments within the economy. The banking recapitalization that he mentioned, was highly significant, in looking at the valuation of the Nigerian banks. Before now, a lot of these banks, would say they post a lot of profits, right? Because of the peculiarity of the Nigerian economy, right? The economy is doing well, the banks are posting good profit, the economy is doing badly, they're still posting good profit. It looks like a sector you want to be, a cyclical sector, because that is the engine of, financial power of the country, so to speak. So but then we've seen performance on the equities market across different sectors, from the manufacturing to the, to the food and beverages to, almost mirroring the performance in the economy as well. Because you look at the last GDP that was released, industry had the biggest growth, right, from agriculture and services. We will say that, oh, Nigeria's economy is service driven largely.
Right.
But then in the last, GDP report, Q2, you saw industry, posting a significant growth. So the economy, like we say, the stock market is a barometer for measuring the health of the economy. There are instances where there are anomalies too on the market. Sometimes market is driven by other factors, sentiment as we would call them, other than fundamentals. But we can say that what we have seen in the last, I would say over a year now, has been both a combination of fundamentals and, of course, sentiment will always play a role.
But shouldn't a hold be bearish?
See, let's analyze, let's dimension the Nigerian equities market in context, right? We've had, and I'll put this in perspective. We're just discussing now, how the Nigerian Monetary Authority has evolved over time. There was a time when monetary policy decision was something to track for the Nigerian, stock market. But we are just trying to get back to that stage now, as against what you will have in the global economy. Because the direct implication, economics can be complex. Because how you will analyze it, if there was a cut, for instance, somebody will be thinking, okay, more money, right? Less money less cost of borrowing, right? But then the banks will say, oh, maybe the banks will make less profit, and somebody is using that to price equities on the bourse, whether for the banking. So for some sectors, it will be a losing streak.
Be bearish,
right?
for some, bullish for
it
others.
Will be bullish, right? But then Nigerian, stock market, Nigerian Monetary Policy Authority now, right, is just trying to get back to that convention. We've operated that, unconventional, unorthodox, as we call it, monetary policy for so long. And that's why you will see that this hold, and the governor mentioned it, that there's a place you used to be. You don't want to quickly, you don't
want to go back there.
You don't want to go back there. And because you don't want to go back there, you better keep the gains you have now, while you are closely monitoring all the variables that you need to monitor. And when the time is right, you take that decision. Dr. Paul mentioned, foreign portfolio investments and, foreign direct investment, and how they differ, and that has been a problem even since the time of Goodluck Jonathan, right? I dare say that the last time we had, a good foreign direct investment data in terms of flow
been a while.
was 2010. It was 2010 or probably less, right? So in about 15 years, we've had that, colossal disorder happening in the foreign direct. I'm not trying to add to what doctor said.
Colossal disorder.
Durable disorder.
No.
Right.
I'm not trying to add to what doctor said.
Right.
But I'm just trying to say that the foreign direct investment space has suffered a lot, and it's easy to analyze, right? You mentioned insecurity. The time it will take for you to reap benefits when you directly invest in the real sector, it takes a long time, right? There are policies you need to put in place. Structures you need to put in place. There are approvals you need to get. If you are a foreign investor coming into the country, you need to set up, depending on what you are coming to do. So the gestation period is a lot. And while the gestation period is on, the government changes, and the new government comes with a new policy, you lose all the money.
Right.
So before we will see foreign direct investment, we have to show consistency in policy. Right. To say that I'm a different party, I come into government and then I change whatever the previous government has done. You must ensure, we have to think holistically that as a country, that see, this is like a business, right? For a business, even if you have a change of management or board, You don't want your customers to know that something is wrong in-house.
Right.
You want to really manage it so that you can have a good posture out there. And I think that's how we need to begin to think about government. Because if we think government as business, we will do the right thing at all times.
Right. So,
Yes.
Mr. Laja, at this point, how do we make the politics of things actually help us? Because, talking about this inconsistency now, when a new government comes in, writes up the other policies, starts another one, that's tough.
Legislation. We need to know what we want. And whatever we want, we should document it. I've advised for national economic growth plan or national economic development plan. This development plan could be for 5 years, for 10 years, whatever it may be. But this should include all political parties. And if your political party is relevant, it will be represented in states and it will be represented at the federal level. So when we have this document, professionals can help in health, in economy, in engineering. We come together, put this document and say, this is what we want for our nation in the next 10 years. So whatever whosoever you be, whether at the state level, at the federal level, it will not count. You can add your vision to what we have already. Because what drives great nation is the vision of those that are the elites in that nation. So if we document us and we send it to the assemblies, National Assembly, and National Assembly send it to all the states, and even if we don't want to unite like that, we can do the federal. While state government, I'm advising a few of them, and I'm saying do the same, such that legislature passes that to law. Whosoever comes to office, we know that if we first need two-thirds majority to change what has been agreed, one, we might say our immediate concern is energy if we truly want to develop. If we know that a country of our size, we should do more in manufacturing than we are doing in agriculture. We should do more in the rate of growth of manufacturing when you compare that to rate of growth in service. We need to do more in rate of growth. I'm not saying the growth rate. The rate of that growth rate, we need to do more. Now, for us to achieve this, we know that politicians have their own intention. They might have campaigned. Some will use faith to campaign. Some will use love to campaign. Some will use hope to campaign. When hope is there and faith is coming, they say, no, you don't need to have hope again. What you need to have is faith. Another one saying, I don't need hope and faith. What I need is love. Another one may come and say, what I need is unity. Now, beyond all of this, it's important for us to say, whatever you have in vision, these are the things that must be achieved. What are the core things that are concerns for all Nigerians? For me, energy is one, two, transportation. Because when we talk about GDP, what are we referring to? We are talking of total monetary value of goods and services that exchange hands. Exchange means you need transport. Goods and services mean you need to create them. Energy comes to play. Then the other surrounding environment, which has to do with institution, corruption, and all of those things. If we document them, pass them to law. Now, every time we throw in a new leader or a new president, it really does not matter. Nigeria know that if we continue to make this XYZ money, certain percentage of all our revenue must go into infrastructure, maybe 40%, maybe 50% as the case may be. But first, we need to agree. Nigeria has had different economic growth plans, somebody will say, but I will also have such person. How many have we passed into law? Yeah. None. So until we pass into law, like Rwanda did, look at what is happening in Rwanda. Even if Paul Kagame is no longer the leader of Rwanda, it's a law. You have to do it. Germany made it law. So we envy the growth we've seen in those countries that are sustainable. They are not individual driven. They are institutional. And that is why you see a great country, look at Mexico and America. Countries that speak the same language, countries that even have intermarried, countries that have the same culture, they dance the same way, they eat the same food. On one side of the left, there is poverty and hunger. On the other side, there is prosperity. You know why? Institution. When we all respect institution are stronger than whosoever is the richest, whosoever we call the wisest or the most powerful, it is really not important. Not important. President Donald Trump can make a law. It will be suggested to the assembly. Not that, oh, this is what the president said, therefore all of us must sign it. Irrespective of who is in office, whether from a religion or from a tribe or from a side or from an industry, it will not matter. That is when the politics will enhance. You see that all the political parties will restructure very quickly. You will not ask them. People creating multiple parties will now start thinking, how do we fit into this law? Yeah. Now, those who do not have energy and somebody who has intention to steal money, we have a rethink that, see, this is the law. Nigerian lawyers will now become part of civil society because they say, now we have the law. Civil society, we have things to hold people accountable for. all children must go to school. Whether you're in the north, then you're going to see reduction in out-of-school children because governors, we know that there's a law that bound the states that all children must go to school. There is nothing like, oh, this is our culture. It's no longer cultural. It's now legal. So until we pass it into law, we can make the policy, we can write it down, but if you don't pass it into law, it's just exercise in futility.
Right.
And I would not support
All
that.
right, you can jump in there.
Legislated development plan, which is what the doctor is advocating for, is just the right way to go. And we have some few examples. Look at the MTEF, that's the medium-term expenditure framework.
Right.
That was a brilliant idea under the Ministry of Finance when Dr. Okonjo-Iweala
yes.
was Minister of Finance. After then, we have PDP government, we've had APC government, but that MTEF plan has been consistently maintained because it's legislated. You must present it. It is from there you draw the annual budget. Even when we had the government of President Buhari,
yes,
and he was advocating for zero-based budgeting. You know, Nigeria, we like to throw terms, right? And then he was saying zero-based budget. He still had to abide by the MTEF. It's an example of when we have developmental plans that are legislated, because what they do is that it makes it binding. Of course, I would trust that we are not planning to go against the law, which is another area that we need to talk about.
Right. So much
Yes.
to unpack there, but definitely we've had this the decision now, and definitely I guess at this point we're looking into 2026. What's next? What are you seeing on the horizon? I'll start with you.
Yeah. Okay, so for me, the president made a projection of 15% inflation. If we had used the old base year, honestly, that would not have been achievable. At best, it would be around 28, 27%, because some of us still track current number with the old base year, just that we can put it side by side. So Nigerian inflation would have in fact reduced, but it would not have gotten to 16%. It will be around 28% as we speak. But the good news is that we have rebased, and it's not an offense to rebase. In fact, it is globally acceptable that you rebase after some time. Now, what you need to be careful of, your base year. Why? Because even if your economy is not that performing and you choose a weak base year, it will come out as though your economy is performing. So for next year, I'm seeing a much reduced inflation numbers. What we cannot decide now is what will happen from April next year. Mark you, next year is also a pre-election year. And from that April, perhaps, you would have started seeing some electionary activity. What happens? What is the most important at that time? There's increase in money supply, exchange rates. And this is where Mr. What's it called now? The central bank governor, Mr. Cardoso, needs to also put up his team. They need to go back and roll their sleeve, because this is the first time we will be facing election year. But most importantly, politicians are the biggest enemies that you may have at that time. With the way he's running the economy, which is professional, I must say, because when he was doing that, we said it. With the way he's running the economy now, which is professional, what is he going to do such that politicians will not spend dollar for their delegates? If he cuts that off, this stability will be prolonged. It will get to 2027, and Naira will even get improved, because when you expect stability for a long period of time, it will now start reflecting as an improved number on your local currency. But if politicians were able, if they're able to have their way, I am sorry, Mr. Cardoso may have to start all over again.
Let me get
I think that if I pick it from where it stopped, you know, so, I mean, Dr. Cardoso will also tread with caution, because politicians are not people you want to attack when elections are coming.
Yeah.
You know, to that extent, I think that the best he will be able to do come 2026 is to maintain. I think he's going to hold closely an NPR at 25% and above very tightly. I think that he might even try to, you know, make another move to further tighten, just to ensure that whatever actions that he doesn't have control over,
because he doesn't have
can
control.
take care of them.
Fantastic. I want to thank you both for coming on today. It was a great one, and thank you for helping us unpack what's before us at this point. I'm Mr. Robert Motunde, partner, MD Consulting, Dr. Paul Alaje, senior economist, SPM professionals. Thank you both, gentlemen, for coming on today.
Thank you so much for having us.
So there you have it. It's official. That's it. 27%. That's for the monetary policy rate. CRR remains at 45% for commercial banks, 16% for merchant banks. Liquidity ratio 30%. Standing facility corridor plus 50, negative 450 basis points. I guess at this point, we'll see you at the next one. Thank you for watching. I'm Ladi Williams. We'll continue the conversation tomorrow. Bye for now.